Hi everybody, this is Gabriel. It's quite amazing what's going on right now with the US dollar Swiss, and I just had to make this video because it's such a great practical example, and let me know whether this triggered some aha moments for you. Just to touch base, we have got this huge S1 pattern here on the monthly chart. Volatility has come down quite a bit. We've got these stop run levels aligned, and we just made the first move, like the first stop run move. That is kind of, yeah, it's not a big one, but I can see that something is going on, right? So there's a lot of more volatility expansion ahead and a strong move to the lower side. But we don't know how long this takes, right? I mean, this is the monthly chart. We could plot another month, 2 or 3, being a range or a small bar, and a small bar on a monthly chart. Well, that basically brings us on the weekly and the daily chart into overall sideways, right? So the best trades and the biggest R multiples come if all the time frames are aligned, which means that the monthly is in a strong trending phase, and that pulls after it the weekly, and that pulls the daily, and that pulls, like, in the end it pulls like the lower time frames in each of the lower time frames, and that ideally then we see a couple of patterns, whatever, S1, S2, S3, that are triggered, fired one after the other, right? So this is the reason why I had sent out these 2 emails here at that point of time. I thought, oh, I can pick here the exact moment that this actually fires, the domino effect, right? After these 2 S1 patterns short, I was hoping, well, now we might actually have the moment where this fires, and as this fires, we should actually see here, because on the daily we've been below the red line, and then this fires, and then it just continues and triggers yeah, the dominoes. So whenever you trade a pattern like a daily within a monthly, and here this was a 15 minutes or a 15-minute within a daily. So whenever you trade patterns within patterns, well, it's basically not very reliable, right? However, it has a huge R potential, and this is why it's so important to get this timing right. And well, obviously there's some luck with that as well, right? So here I thought we would be lucky now, and we could actually trigger an extended move that would then be a pyramid move, basically, right? Running the daily and the monthly. But we see, well, it's unreliable. And what we see here, well, it's a bull-bear fight, right? So after these 2 short patterns, it has broken higher. Well, then there's a long pattern, right, that fails. It has triggered, and it basically fails. Then we've got another short pattern, and here another short pattern. So it's basically, well, something is going on, right? And the market knows it, like the market actors, the bulls and the bears. Something is going on, but it's not like the 60 or the 15-minute charts are able to take the lead. If they would, well, then these would have worked, right? So that basically means that, well, a higher time frame is taking the lead, right? And it might be the daily, like forgetting about these patterns, looking at the daily. Well, what happened is we made a rebreak, we made a first good move, a big daily bar, and we didn't get close to the first stop run level. So what happens? Well, the bulls come in, we get a pullback, we test the flat, which is perfectly fine, right? It's just a test of the flat from below, and we get a couple of small daily bars. And these couple of small daily bars, well, they produce these patterns, but we can see the pressure is building up on these lower time frames. We cannot see anything on the daily, right? So the daily has to actually show now some moves. So basically what we need is, well, we need at least a break below this level, which is nothing else than this wick, right, on the daily chart, which is this wick, the lower wick. So we need to break this lower wick in order to have a good chance to make a new low. And whenever we make, well, and then obviously the next important pattern is this. Whenever we make a new low below this, well, then we're off for the run of the first stop run level, right? So that's the next target. And if this happens, well, then we can actually hope that the next time frame takes over, which is the monthly chart, right? So after this triggers, well, obviously we're hoping that we get triggered this soon, and if this gets triggered, well, then we're hoping that the monthly chart takes over, right? And the monthly chart, well, as you know, it has some nice stop run levels laid a little bit further away. But if the monthly takes over and we see big red bars, well, then we see then we see an explosion, right, on these lower time frames. And we see already, like, the bulls and the bears, they are very attentive and they're already fighting their small little fights, right? I mean, these patterns, they don't, well, especially the three last ones, they don't fulfill the rules because of a higher time frame alignment. But I can see that there are TC patterns, so there's some fight going on, right? There's a lot of attention on these time frames. Now we have to wait for a higher time frame alignment that everything falls into place, right? So the first thing is the daily chart. I want to see the daily chart to start moving, and then if it starts moving and if we see nice momentum, and I'm expecting good momentum because of this, right? This is a momentum move. So I'm expecting something similar like this, like 10 days of consecutive selling. If we get this, well, then we get a nice move here, similar to this, and the measured move. Well, this brings us very close to this stop run level. So it's a lot about stalking, trying out, right? So this didn't work here. Well, I'm still in my long-term investment position, long Swiss franc. So when do I know when I'm wrong? Well, I'm still completely fine because we only see a test of the flat, and that's basically a confirmation, right? The flat is important; it's resistance on the overall way down, and I'm perfectly fine. So I already opened 2 positions. I've got 2 positions more to pile in if it works. So I'll do that if this daily low gets broken lower, and maybe the 4th position when we actually break the low of the consolidation, or once this has happened in a pullback. So when do I know when I'm wrong with this investment position? Well, when price actually breaks the 93 big number level, the breakout high, swing high, and I want to see a daily bar close just to get a little bit more, a confirmed failure of this pattern, right? So then I'm basically out. Well, what would that mean on the monthly chart? So if this daily doesn't work out, this is the daily pattern, right? So if this daily doesn't work out, well, then I'm actually expecting a pullback to the flat on the monthly, and I don't want to stay in this trade, right? Even though it's a long-term trade, I don't want to stay in this trade and survive a pullback of this magnitude. I would rather want to exit right here at this monthly wick high, which is a consolidation high here on the daily. I rather want to exit here and then see, get price back to test here, or even go beyond the flat. It might even test at the par level, and then I might want to get back in with a stop up here, basically. So and this is it. It's a little bit a trial and error, right? If you get a pattern within a pattern, you might get stopped out or not. Whatever, there's a huge potential in here. We can nicely see here the weekly, right? There's free fall territory here. Everything opened up, but it has to start to move and show some action on the downside. Very normal that we get small bars, right, and indecisive bars. It's very normal as part of the S1 pattern. The bears are just getting in, pulling in some more energy to make this move, right, to make this stop run move that requires energy on the downside. So let me know if that's interesting. That was interesting, and whether that triggered some new learnings for you. Thank you.